Good morning, it's Friday the 24th of February. This is the Phoenix Blue Update, brought to you this morning by Tom Colley. Well, here we are Friday again, and we've had a very mixed week, particularly as regards where the dollar is concerned. We've had the Fed members talking up the dollar prior to the release of the meeting minutes. The meeting minutes were potentially more hawkish than the intervening data wanted the Fed to actually be saying. Hence, we had some real aggressive talking up just prior to them. The markets then responded to the less hawkish comments or feedback out of the meeting minutes, which led to a dollar weakening. We also then had interventions from particularly a guy called Steve Mnuchin, who is Trump's new Treasury Secretary. He was talking yesterday. He said that they were looking to have a tax reform plan agreed before the recess in August. He said that he was or believed that growth of 3 to 3.5% was possible based on implementation of Trump policies. Interestingly, slightly behind where Trump himself had previously said in the election campaign when he talked about 4.5%. He also said that they weren't going to label China a currency manipulator at this moment in time. They were awaiting for a regular report that appears in June before considering that as a possibility. Okay, let's have a look at the news we had yesterday. Well, the meeting minutes were on Wednesday evening. We've already spoken about those. We had private capital expenditure on the Aussie early yesterday morning, came in disappointing. Then we had employment claims from the US, very much on forecast. Then crude oil inventories. We're in crude at the moment, we're short crude. We've had some unusual moves in crude based on A, comments, and B, data. Here we had some good data suggesting that crude oil inventories were lower than was forecast, meaning there was less surplus around. However, saying that the immediate response of the market to that data was a move to the downside. We had a speech from Governor Lowe from the RBA, the Reserve Bank of Australia, last night, but that wasn't really very related to the markets. Today is a very quiet day for news. We only have the CPI for CAD out at 1:30 UK time. Okay, so here's the dollar index, and it's been really somewhat a week of two halves. We can see the early part of the week we had bullish statements out of the Fed. We had this bullish 2 days, particularly Tuesday through there. And we had a high on Wednesday before the market turned, as I know I said, I think at the time, that turned quite dramatically somewhat as it had done the week before. Since then we've seen downside. We're at this key level of about 180 at this moment in time. We're still bullish as long as we stay above this level through here at about 99.80. However, there is potential for the inverse head and shoulders still to be in play. It's not as neat as maybe it would have been if it had come down from this point, but still something to bear in mind, if we, particularly when we break that, or if we break that low at that point. So really the net result is uncertainty in the market. We've been very cautious this week. We've been looking to the cross pairs to offer us opportunity to divorce ourselves from the volatility in the dollar. That went well earlier in the week. The latter half of the week, in all honesty, the opportunities haven't been playing out, so particularly yesterday was a quiet day from that respect. Okay, over on the yen, well, again, somewhat like the dollar index, we're still bullish this market as long as we stay above this low through here. Not really much else to say at the moment. This market on a couple of days has moved inversely to the dollar-euro relationship. That causes us caution in this market, and we had nothing in our plans to actually trade yen this week for exactly that reason. Here is the euro, and obviously, as always, it's very much a reflection of the dollar index. We had a low down here on Wednesday that spiked away, and we're now bullish in this market at this moment in time. The key level through here at about, I think that's 106.20. A break above that, and we then have our sights maybe as high as 108 up here, which is the neckline of what would then be the inverse head and shoulders on this chart. The pound yesterday, well, it's been battering away at this 12.25 level for all week and the back end of last week. It finally broke through very significantly and strongly yesterday. We now have an order at 1.25, a limit order, waiting for a potential pullback to that level, targeting one of these two levels that you can see up here. The level of the target will be somewhat driven by the data that comes out overnight on the COT index. We had a COT level here. We currently have a current COT extreme short signal, but depending how that measures up compared with the previous one, will give us some indication of whether we need to be seeing this first level as a target, or whether we can let price run onto this second level where our T2 target is at this moment in time. So again, we're looking for a pullback to 125 to take that to the long side based on that significant break. Over on the Kiwi, 77.30 was a level we identified in our watch list at the weekend. That opportunity arose, we've taken that, we're short this market now. We have always been aware that there's another significant level here at 78.35. We'll be looking to trade that short should this fail. So we're uncertain exactly what's going to happen in this market. What we do know is from our strength and weakness analysis that this market is the strongest of all the currency pairs, all the majors and minors at the moment. When it reaches this level, this is the most significant level, we'll either see a retracement or a move back to the downside, a reversal, or if we see the breakthrough, we'll be looking for a retest for trades to the long side, which would give us plenty of scope because there's very little resistance in the immediate future above this level. So that's the key turning point, an opportunity here. We'll be looking to take money off the table once we get to 50 pip profit, if that occurs, and then our stops to break even, meaning that we don't have to see this as a full move in order for us to take some profit in that. When we get the stop to break even, obviously we'll be in that trade at a no risk basis, so whether it plays out or not then it has no financial consequence or negative financial consequence for us. Another market that was moving yesterday and has broken a significant level overnight is gold. 12.50 is the significant level. We've broken above that, or we're breaking above that as we speak. I know when I looked at this slide was taken slightly earlier. When I looked at this more recently, that break had continued and looks as if it's going to follow through today. There is no risk on, risk off relationship at the moment. The stock markets continue to rally and are now in the region of 10% up since Trump was elected. And still for that same period, or the much more recent period of time, we've seen gold to the long side as well. That's really about uncertainty playing out in other markets. Another trade we've been talking about this week is crude. We've had a very clear and obvious range between 55 and 52 US dollars in crude. This is the 4-hour chart. We got in here the day before yesterday, I think it was Wednesday. Price moved away to the short side. Unfortunately, our initial profits were around below about the closes down here, so we didn't get profit off the table and our stops to break even. You can see that I've actually marked in there to remind me that I've now moved those initial take profits. If we get down to what would be this double top neckline, I will be taking profits, half my profits off the table, moving my stop to break even, but looking to further short side on this. We have a COT extreme signal on the top of this range. which means we do prefer the downside. We're not saying that this range isn't going to continue. But what I would say, this market has been reacting unusually this week. We've had speakers out talking the market in one direction and it moving the other. As I've already mentioned, we had data out yesterday on US crude oil inventories. The surplus was reduced on that. We would have expected the price of crude to rise based on that, but this engulfing bar here is what actually happened immediately during or after that data. So the range is very clear here. It's a technical trade. We can't rely on fundamentals in this respect at this moment in time, but still optimistic we'll see that certainly at least the bottom of this range. We will obviously potentially look for another opportunity to add in if we get the break below these lows here. Okay guys, that's it for today. It's it for this week. A reminder of the next free trading event in London is Wednesday the 15th of February. March the 11th we also have an investment masterclass in Sweden. You can get more information about these from the website, which a link should appear here any moment. And also there's the opportunity to sign up to subscribe to the YouTube channel so that you get a heads up when these videos come out every day. Have a great weekend, take some time away from the markets, and let's do our analysis. Be back to the markets on Monday with a fresh look, and have a great weekend. Thank you and goodbye.